Welcome back. It's time now for the Word on Wall Street. Top investors watching your money. Joining us right now is Allianz Chief Economic Advisor Mohamed El-Erian. Also with us is Mark Tepper this morning. Mohamed, great to see you.
Wonderful to be here.
Thanks so much for joining the conversation. We want to get your take on markets and the broader macro story. Markets this morning are lower, largely because we got a big upset in Oracle. The Dow Industrial's down just 9 points, but the Nasdaq off 154. Oracle, of course, plummeting nearly 12% this morning. The company last night missed revenue expectations. It is down almost 12% at 196 and change. Despite this booming demand for AI infrastructure, we've got a reigniting of fears of stretched technology valuations, sparking a broader AI sell-off. Investors are worried about whether AI demand can justify Oracle's heavy spending. The company reported a 438% surge in long-term contracts, with new commitments from Meta and NVIDIA, but it's also warning of higher capex and negative free cash flow, fueling fresh concerns about its massive AI build-out. Mohamed, I asked Jensen Huang this very question about all of these trillions of dollars moving into the data center build-out, but when are we actually going to see a return? Watch this. Jensen, I want to get your take on all the money moving into the AI infrastructure build-out. How much are you expecting that to be, and will we see a return on investment in that money soon?
Artificial intelligence in the last year made some humongous breakthroughs. It is now effective, it's useful, it's generating really good results for users. It's impacting every single industry that we're observing. Everything from healthcare to, of course, enterprise computing, where we do work, and whether it's manufacturing, robotics, we're seeing breakthroughs in every industry. That platform shift is just beginning, and we're just seeing it so strong and accelerating because now fundamentally, finally, AI is delivering really great results. And it's the reason why we're seeing the fastest growing companies in the world.
Mohamed, there's no doubt that it's delivering results, but are we going to actually see a return on investment anytime soon?
So that's the question. I think the market has woken up to the revenue issue. We are now in an arms race on capex, and the question becomes who has the revenue. I have no doubt that the payoff to AI will be enormous, but it will go to very few companies. And right now, the market is betting on some companies that will not get that payoff.
Yeah. I mean, we watched this a little in .com, right? And when we saw all of those companies trading to huge valuations in the .com era, when all was said and done and the dust settled, there were some really big winners, Alphabet and Amazon, but there were a lot of losers as well.
And we'll get the same outcome today. So Alphabet is a perfect example of a company with many sources of revenues, a deep engineering culture, and a collaboration approach. That company, I would bet on. There are many other companies that lack the revenue, lack the expertise, and they're going to be losers rather than winners.
The other big story of the morning, of course, is the Fed, Mark. I mean, yields right now are down fractionally, but going into the Fed meeting yesterday, yields were up. The Federal Reserve, of course, cut rates as we expected, a quarter point. This was the third straight consecutive cut. Fed Chair Jay Powell signaled a slower pace ahead, saying that the Fed is well positioned to wait and see on further rate cuts. 3 dissents this time. Governor Stephen Myron pushing for a bigger cut. He wanted a 50 basis point cut. The presidents of the Chicago and Kansas City Fed both voted to hold rates steady. The Fed, by the way, is also resuming Treasury purchases, starting with $40 billion in T-bills. The new dot plot shows just one cut in 26 and another in 27. 7 members say they're not expecting any cuts next year. I'm not buying that one, Mark.
Nor do investors. So investors are already pricing in 2 full cuts for next year, and I think that's probably what's likely going to happen. We can see that economic growth has been strong, but economic growth has been strong because of AI. I mean, AI has been boosting productivity. We're not adding a ton of jobs, so we have to bring rates lower. Affordability is a key issue of consumers right now. We need rates lower, especially that 10-year yield, which, as you mentioned, was 3.9% not too long ago and was 4.2 yesterday before the Fed meeting. So it's gone up, which means mortgage rates probably went up as well. We need to make sure capital is more affordable for small businesses, for large businesses, so that they can spend, they can hire. That's what we need for economic growth, and we need more cuts.
What are you expecting from the macro story right now in 25 and going into 26? Mohamed.
I'm expecting strong growth, stronger than what the Fed said yesterday, which was around 2% for this year and next year. Second, as Mark said, I'm expecting a decoupling of growth from employment, and that's a big issue. And part of that is going to be the risk, as you mentioned earlier, that people don't understand how AI should be deployed. and companies are too tempted into cost minimization as opposed to labor enhancement. I expect inflation to be stuck at around 3%. And all this will certainly outperform other advanced economies who are going to face very low growth.
Well, this is the thing. I'm worried about jobs right now. I think the economy feels good. The macro story feels good. And I know the affordability is a concern. But a lot of things have come down in price already. But when it comes to jobs, people are not sure how AI is going to affect them. And I posed the question to Jamie Dimon when he joined us this week in terms of what is going to happen. Do you have a plan in terms of filling the void for people who are worried that AI will replace them? Watch this. Are we going to see any return on investment on all this money anytime soon? We've got about 5,000 data centers that have built for AI. Where's the return on investment?
I heard we did a research report about how much. It's $5 trillion, and that includes everything: the data centers, the servers, the chips, the fiber. It doesn't necessarily include the power plant or the transmission lines, but there will be big winners. You know, you remember out of the internet, you got Google and Facebook and Amazon and tons of others and whole new technologies. But it took a while for some other things to come in, like the iPhone or something. So here, it will eventually pay off.
So what are your expectations on payoff?
So I think they will be significant, but they will go to a few companies. And this is those working on AI.
Yeah.
More important to the economy, Maria, is those working with AI.
Yeah, good point.
And that is adoption. And there's a couple of companies that are leading the way: Accenture, Walmart. They are showing you how the application of AI can be done in a way that enhances labor and doesn't necessarily mean huge job reductions. But the others are still way behind.
Mark, we got to talk about Warner Brothers Discovery. Yesterday on this program, I was contemplating the DOJ and how they're going to take a look at this. And will, Netflix win or will Paramount win? And one thing that I said was it could, at the end of the day, land on President Trump's desk, and maybe he wants some concessions. And perhaps one of those concessions is that Warner sells CNN to a conservative buyer. And here we have the story of the morning: President Trump pushing for CNN to get new owners, saying it is imperative that the network be sold as Warner Brothers weighs a takeover bid from Netflix and a takeover bid from Paramount. Watch this.
I will be probably involved, maybe involved in the decision. It depends. You have some good companies bidding on it. I think the people that have run CNN for the last long period of time are a disgrace. I think it's imperative that CNN be sold, because you certainly wouldn't want to put people, just leave those people with some money, good money, and CNN. So I wouldn't want to see the same company end up with CNN, the same company with money, because right now they don't have too much money, but they have value, I guess, based on the bids. So they've got value. But I think CNN should be sold.
So we'll see about that. Right now, David Zaslav, the head of Warner Discovery, had a plan to spin out CNN into its own company, but they are facing real regulatory review. I mean, the DOJ does not want such a gigantic company in streaming able to raise prices on customers.
Well, and I see what President Trump is talking about with regards to CNN. In capitalism, you really don't. Unfortunately, losers have to lose. You can't have winners winning in capitalism if everybody wins. It completely is impossible. So if you are a losing company, you're running out of money, I understand. They don't deserve a lifeline, and all of a sudden they become competitive again.
Well, we'll see what happens. What do you think?
So I think this is an indication of a general phenomenon, which is the big will get bigger. The middle will get hollowed out. And we have to decide as a society, should we allow the big to get really, really big? Or should there be regulatory boundaries to make sure that some of the middle survives? And that's a really important question for the future of this country.
And the questions that the DOJ are asking right now, they're examining whether or not consumers are going to face higher prices than without the merger. They also want to know if there's going to be vertical foreclosure. In other words, will the DOJ examine whether Netflix could reduce or withhold Warner content to competitors? It's another issue with antitrust.
And that's what happens when the big gets bigger. They get monopoly power, and then they can control all sorts of dissemination issues.
A lot of changes happening. Mohamed, great to see you. Come back soon. Thank you, Mohamed El-Erian. Mark, you're with us all morning, and we appreciate that.